I do think that something fundamental is changing in Japan when it comes to the inflation environment. Um, I think that there is a tendency to talk about inflation and think about inflation like it's some sort of exogenous factor that happens to economies. But of course, in reality, it's the kind of aggregated result of millions of micro decisions that take place in economies every day. And on that front, talking to thousands of companies every year as we do in the team and talking to consumers, something definitely has changed when it comes to the mindset and behavior around pricing in Japan. Consumers are more willing to reluctantly accept price hikes, and companies are much more proactive in thinking about the price setting mechanisms in their businesses. So something has changed. I think the BOJ knows that. It's just trying to steer a very careful course. It doesn't want to go too early. If you take out the CPI over nearly 2 decades in Japan, the CPI has been negative. If you take out the VAT hikes, the CPI has been negative over nearly 2 decades in Japan. So there's some interesting sort of green shoots on the structural inflation front. And I think the BOJ just wants to be cautious and doesn't want to go too early, which I think makes sense.
All right, Carl, fair enough. And I'm not going to force you to call the BOJ decision or commentary ahead of it happening. Talk to us about, let me try this angle, though. When people take a look at the Nikkei 225, 33-year highs right now, everything sounds good on the surface, the headline, right? But I think the deeper question a lot of folks are asking is at roundabout, what are we doing now? About 33,000. Are we closer to peak Nikkei 225, which would be 38 during the boom? Or potentially, is there the risk we could head to 28? Is that a question you're asking yourself?
I guess I'm thinking about it from a longer term perspective, where I'm thinking that there's a very plausible case for Japanese equities from here to compound 12 to 15% returns in the next decade. Okay, so I really feel that there is an incredible long-term opportunity from the Japanese equity asset class that will be driven by earnings growth. And I think if we think back in the last 20 years, what we've typically heard about Japan is that it's cheap. We haven't heard that there's structural earnings growth opportunity in this market, but I think that's exactly what we're looking at. In the last decade, Japanese EPS has grown about 10% compounds, beating the S&P 500, which is amazing. And I think there's plenty of evidence and intention to suggest that they could repeat that in the next decade. So if you take 10% earnings compound growth for 10 years, you add on the dividend yield, you add on buybacks, even before we get to any re-rating, and let's not forget the Japanese market remains quite attractively priced, then you can get to a mid-teen total return. So I think that historic highs, if we look forward in the next few years, are going to be exceeded very meaningfully. Now, clearly, year to date, the market's had a big move. So who knows about the next 1 month or 2 months? But I genuinely believe that there is very attractive equity returns to be had structurally for several years to come from Japan.